right, gold traders, gold below 1900. We got to speak because from a technical point, gold has confirmed a breakdown or it's closed below support level. And it does seem that more weakness is coming up ahead for gold and also for other commodities, maybe not uranium, but other commodities. And it seems as if the recession trade is sort of back. Well, not the recession trade, but there was this idea that the Fed was going to pause. They didn't raise interest rates in June, but then a few days later, and a week later, Fed Powell mentioned that nearly all Fed members expect that there will be more rate hikes this year. Even the Bank of England, raised rates by 0.5%, taking their base rate up to 5%, and now analysts are saying they're going to take it up to 5.50, and the Fed is saying that there'll probably be two more rate hikes this year, and Powell's been mentioning that we might even be resuming rate hikes quite very soon. So a lot of analysts, on financial media have been saying that the Fed and Powell is now breaking the bull market in the stock market that we've been seeing in the stock market. But I'm not going to talk about the stock market today, although I would advise you all to check out that video we just did last week because, a major technical zone was tested on the stock market, and we warned that we could be nearing a major downtrend. And if you did sell at that level as a trader, then you are doing quite well, or at least you have some hedges if you were short selling there. But we've seen a major technical breakdown as well on gold. And before we look at gold quickly, the idea of this this recession trade, because the Fed, you remember their plan was to have this soft landing, right? So basically raise interest rates by just enough in order to tame inflation or bring inflation close to their 2% threshold level, and at the same time, avoid economic slowdown, right? If rates are going to go a bit higher, maybe two more rate hikes this year, then a lot more people are now considering that, okay, maybe they're not going to get that soft landing. Maybe we are going to see a slowdown. Maybe we are going to get a recession. But again, the Fed, keeps pointing at that labor data, right? The NFP data, the jobs data, saying, hey, the labor markets are indicating no such thing, right? There's no recession or economic slowdown. But it seems like the markets here are getting a bit worried. And if you look at copper, quite a large sell-off at close to that $4 zone as well. And then, of course, oil has just been really doing nothing, right? It's just been ranging around here. And this is after the OPEC surprise production cut, which, again, many people say they tend to do those production cuts when there's going to be a weakness in oil. And that sort of brought oil down lower. We are heading into the summer months as well. Well, it is already summer because we are past June 21st. And generally, you see oil prices do well in summer because that's when people are driving more, going on road trips and traveling, etc. So, watch these two charts in terms of this idea of a recession or an economic slowdown. And it just seems that a lot of the commodities in general are getting hit by that idea. Quickly before we look at gold, the short-term interest rate here, the U.S. government bond, the 2-year yield, when this dropped back down in March of 2023, that's basically when gold bottomed here. There we go, March 8th, and then we continued higher. So it is quite crucial to watch the 2-year yield because remember, folks, gold, technically it doesn't yield anything, right? Bonds yield something, but basically money runs into gold because the real yield, which is this rate minus the inflation rate, if it's positive, then money would just run out of gold, right? Because it's yielding nothing in a real rate of return. But of course, right now, inflation is still higher. But perhaps money is betting on this idea that the Fed will actually continue to increase their interest rates, and that would maybe bring down inflation to a point where real rates might be a bit positive. And that is, of course, assuming you believe the inflation numbers, because obviously there's some people out there that don't, which say that the real rate of inflation is much higher. But we're just talking about what we see here on the charts and stuff. So keep that in mind. If these yields continue to climb higher, technically it would be a bit negative for gold just because gold yields nothing. And if that real rate is heading positive, then money would look into the safety of will look at bonds for safety rather than gold. And then, of course, we have to look at that U.S. dollar chart because gold is that anti-dollar. A lot of people mention that. There's that negative correlation between gold and the dollar. So when the dollar rises, gold drops, and vice versa. And recently the dollar has been in quite a downtrend. You can see the lower highs and lower lows. But then back in April and late March, early and April and through early May, the dollar just began to range here. And for someone who looks at market structure, that is quite an important part, just because a range tends to occur after a major downtrend or an uptrend. So after a major trend, and it tends to signify the exhaustion of the trend, right? So in this case, a range has occurred because the selling pressure has been exhausted, and there's not much more selling pressure coming in, and then slowly the buyers can step in and potentially start a new trend, right? And that could be the case here with this breakout above the 102 zone here. We had a bit of a move climbing up to 104.50 before declining lower. And of course, this all happened post-Fed. So there's that Fed pause in June. But you can see here, we did retest the breakout zone, and we retested it quite a few times. We had a bit of a dead cat bounce here, where we had 3 days of green candle and then a major red candle, just indicating, okay, any sort of dollar rally here is kaput. But then again, the dollar has just begun to rise again, and we even got a daily close above this major doji candle here, printed on the 20th of June. And it could be because the Fed is still being a bit more, or Powell is still being a bit more hawkish. So the dollar could be starting a new run here. And to see that, you'd want to see a breakout and a close above these recent highs here. But as of now, because we are holding this support level at 102, we can say that there is a real possibility of some upside momentum. In order to nullify this, we'd have to see a daily close below 102, which would get us back to 101 and potentially just continue this dollar bear, or this new dollar bear trend, right? So you can see here, when you zoom out, very, very strong uptrend that the dollar has been in for 2022. We have now our lower highs and lower lows, and this range here could be significant in turning the tides or seeing, a new trend begin. And to the upside, there is still a major resistance zone here around that 105.77 zone. So that could be a target going forward for the dollar. But if we do see that, rise in the US dollar, that would tend to be negative here for gold. And, we talked about gold retesting that 2060 zone, which was very close to the all-time highs. And it seems that we have triple top there. A lot of technical analysts talked about that triple top pattern. So while gold against the Australian dollar, I think even the Canadian loonie, the yen, and multiple other currencies broke out into new all-time record highs, gold against the dollar failed to do so. And while I was away, actually, from May to basically last week till June 22nd, gold's done nothing. It's just been ranging between 1980 here to the upside and 1940 here to the downside. You'll see this channel that I've drawn out. We'll take a look at it on the weekly chart because it's something I've talked about in the past. But because of this major weekly or this major daily close, which confirmed a close below that support level, it is quite negative for gold. You can even see that the next two candles even had our pullback and retest, and you can see that the sellers are stepping in as indicated by those large wicks coming in at our resistance zone there. And then going forward, again, folks, this is just typical retest price action, and we are seeing that follow through right now. We have a breakdown, we have a retest, thus we should expect that the price of gold will actually head down a bit lower. If it does, of course, take out these recent lows here, then we can expect gold to probably come back down to the 1860, 1850 zone, and then I would even say the 1820 zone. So gold basically back below 1900 is very, very real and is very possible in my case, in my opinion here, looking at the technical. In order to nullify that, we'd have to see a false breakdown, which would mean that sometime soon we see gold just reverse and confirm a close back above 1940, which would then trap all these bears or these sellers who are short selling gold, and that would then possibly lead to a fake out, which would lead to a rally going higher. There is some resistance, of course, here around the 1980 zone, so we don't want to see that being taken out as well. But going now to that longer term chart, the weekly chart, this channel here, this trident, as some people call it, and it's just a fancy way of saying, you have three trend lines here that connect quite well. Again, these are very, very strong levels because of the multiple touches we have had. I want to focus on the one here on the top because you can see the multiple touches here. And we even said that the breakout way back in March of this trend line, very, very significant technical pattern for gold, which led to a move higher and that retest of the next resistance zone. Pulling back again, retest, right? Very, very similar. You can see gold actually pulled back, saw buyers step in at that 1940 zone as we retested our support and that trend line. And we did it again, right? During the time I was away, there was a huge, like a long range here. And it was because we were at not only that support zone, but also because we were at this major trend line as well. So, multiple confluences, right? That's really, really what you want to see in terms of probabilities and statistics when you're taking a trade. But this was a very, very key zone, right? Because if you are at a support or flip zone and also an area where this major trend line breakout occurred. And as you can see, from last week's candle, gold actually confirmed a weekly close back below, not just the trend line, but below these support levels on the weekly chart, which again is actually another bearish sign. So it does look like, folks, that all the technical indicators here are aligning for lower prices here for gold. And as I said, our target is around the 1860 zone, and then eventually this 1820 or 25 area on that weekly chart. The only thing that would nullify that is, if we do see perhaps the yields drop lower or the dollar drop lower, that would coincide with gold prices closing back above 1940. And then again, nullifying this support breakdown and confirming a false breakdown, which would lead to sellers being stuck and bulls hopefully taking back control and getting price move higher, squeezing out the short sellers. But that's it for me, folks. If you enjoyed the video, give it a thumbs up. Be sure to subscribe to the channel and let me know in the comments below where you think the price of gold is going and other precious metal. Do you think that dollar is going to continue higher? Do you think yields are going to continue higher? And what does that mean for the price of gold here as as the new trading day starts here in Asia, and we're already seeing a bit of a sell-off here? Do you think gold continues to sell off and hit our targets at 1850 and 1820, or are we going to see a major reversal and thus a false breakdown in gold? I really want to hear your thoughts in the comments below, and I'll catch you guys all in the next chart attack video.